Hello, this is the trade site U.S. stocks and futures market preview for Monday the 20th, the week beginning Monday the 20th of June 2016, ending Friday 24th. Let's talk a little bit about what's coming this week. Let's look at the markets. Let's discuss actually what's left in the month of June because it is the end of the quarter and the end of the second half of the year. We'll get to that in a minute. Here's a look at the ES front month futures contract. Again, we swept the highs 2 weeks ago, come back in to the range we've been in. Looks a lot like last year, by the way. Really boring. Remember, look at how we get up here in March and April, and we've been right between that 2120 and 2040 level. If I slide back to last year and look at March and April, the highs 2125 going on over the summer, and the lows 2050. It's almost the exact same numbers. Look how flat that was. Really boring action in the markets until we got to the August plunge over a couple of days, and then the bounce back, double bottom. Just showing you how this played out, right? Then we went back up for Christmas, rolled over in January, had some good volatility. January, February, March on the bounce back up, another double bottom, and now we're just sitting again. If you go look at the weekly chart of this, when you get those two double bottoms together, they almost look like a weekly double bottom. And look at this basing action. I mean, it's just unbelievable. Straight sideways action. I mean, if we could break out to new highs after a base like this and the two double bottoms, it would be probably meaningful, but so far no sign of it. All right, so let's take a look at what we did on Friday. We had crude oil back up to 48.07. That's up $1.87. Gold up $3.60. That's almost that is a new closing high print for a while. Here's a look at the S&P lost 6. Remember, we expected the markets to be flat on Friday due to triple expiration. We'll look at the intraday action in a moment. Here's the NDX lost 50. Not pretty there. SOX only down 5 points. Biotech's down 56. That doesn't look great as a chart. Breaking that static trend line. The VIX up 0.04, not a big deal. The trend 0.95. Excuse me. Here's a look at volume. NASDAQ volume, 2.3 billion shares. Obviously, that's the type of spike up you expect to see on options expiration, especially triple expiration. If you go back to March, the one other dot that's up here in this area, that was expiration in March. So, that's when we get it. Usually you get it, you can see in April, just a single expiration. We were a little higher. May, a little bit above everything else, but not much for expiration. So those are the expiration days. A lot of volume leading to nothing as they close out options positions and flatten out the stock positions. All right, advanced decline ratio, negative 525. That means 525 more stocks down than up for the day on Friday. Advanced decline ratio on the New York, that was plus 677. Note that the 10-day moving average of both of those is in negative territory. Google lost 20 points. That is actually significant. Look at that. That is not a pretty chart. That could be a problem come Monday. Apple also down 2.22. None of these are pretty, and considering it was options expiration, it's kind of surprising to see these moves on just the big stocks. Most everything else did not move. Amazon, after that 13 sell signal, not a surprise, but it's only down 11 points, which is a blip for a $700 stock, and Netflix was down 99 cents. All right, let's take a look at the intraday action during the week. And what we're going to do here is go to 10-minute candles so we can see the whole week from start to finish. And so Monday, small gap down, filled it, drifted lower. It was very much a drift. Tuesday, basically a flat opening, very small gap that filled quickly, if anything. Drifted lower, came back up for the close. Wednesday, a small gap up that actually never filled until the very end of the day here. Remember, Wednesday was the Fed announcement, one of the flattest Fed announcement days I've ever seen. The spike you see is when the Fed announced. Came up and back inside of a 5-minute candle and then resumed a 3-point range, essentially. And then the very last 10 minutes of the day sold off to fill the gap. Thursday, you gapped down, pushed lower. That was our big day for the week. Much more money made there for us than any other day, as we expected coming into the week. Then bounced back, climbed all the way back to fill the gap, closed up. And then on Friday, a small gap down that never filled. And we kind of pushed a little bit lower, a little bit higher, a little bit lower, a little bit higher. But, the real key here is we've been stuck to this key 2062.50 level, and we were still trading right at that level at the end of stock market hours. As a matter of fact, let me go actually see what the closing print was. If we go to 5-minute candles, we ignore, remember, you get 3 bars after the stock market closes, right? So the last 3 bars here are the stock market closing. If you look at the 4th bar back, the close of the day, 2062. We've been talking about this number, 2062.50, for a long time. It's a magnet point for the market. Why not close right on it for triple expiration? Might as well, right? Might as well. All right, so what do we have in the week ahead? Well, the main thing coming out this week is not something that you would think would directly impact U.S. stocks, which is the Brexit vote, whether or not the UK is going to bail or not, that is Monday. That is going to absorb the market probably. Obviously, if there's no change, then it's probably business as usual. On the other hand, if they vote to leave, that could lead to some other stuff. So it'll be interesting to see how that goes. There is no economic data here on Monday. What this doesn't list for you, though, on this table here is that on Tuesday and Wednesday, the 21st and the 22nd, Chairperson Yellen is speaking to both houses of Congress, giving testimony as usual, as she does from time to time, so that can move the market. Then Wednesday morning, MBA mortgage index and the FHFA housing market price index. Existing home sales and crude oil inventories, that's the weekly number. Thursday, the weekly initial and continuing jobless claims number, the monthly new home sales, the weekly natty gas number, Friday durable orders, and Michigan sentiment. So it's a light week for actual data, but it's Yellen testifying in the Brexit vote that's probably going to consume the market. Let's talk briefly about what's ahead the week after this one, because it's important to put in perspective where we're at, not just in terms of price, which is that stupid 2062.50 level, but in terms of time. We are approaching the end of June. That is the midpoint of the year, believe it or not, the end of a quarter, the end of a half. Obviously, in the end of quarters, we get statement printing. Things slow down for a day or two ahead of that. So we have a full week this week. The following week, Monday the 27th, Tuesday the 28th, Wednesday the 29th, and Thursday the 30th is then the last day of the quarter. So Thursday should be a bust. Everybody's got the big players have the stocks priced where they want them or close to them. They just want those statements to print. They're not moving any more money. They've already made their position adjustments for the quarter to show what they want to show on the books for the end of quarter. So that can kind of basically mean that Thursday will be a boring day. It means that Wednesday they've got most of that work done. And then Friday, the 1st of July, now a lot of times July starts out and now they're free to start moving money again, and they start to look at the second half of the year, and it can be a big move right away. But what I'll tell you is, because Friday the 1st falls on a Friday, I would not anticipate this. And remember, the 4th, Monday the 4th is 4th of July. That's a holiday here in the U.S. So really what you look at is, we talk about summer doldrums kicking in. I think this next week still has some big opportunities because of Yellen and the Brexit vote. But the week after, maybe you get Monday, Tuesday. By Wednesday, they start to leave. They've got their positions wrapped for the quarter. Thursday's just sitting here printing to print the statements. Nobody's coming back for Friday heading into a long weekend. That's when they'll all be gone anyways. They'll extend their Monday holiday into what could have been a 4-day weekend. Now it almost becomes 5.5. So I bet you a lot of the big players leave Wednesday the 29th at midday and come back Tuesday the 5th. And then we've got July, and the first half of July can be a little bit slow. But I think August, well, actually, no. Actually, let me take that back. The first half of July is usually decent because the movement for the second half of the year, they start moving the money around. Second half of July can be a little bit slow. August is when all the excitement started last year, so we're already getting closer to that. And then September and on is usually great. So that's the roadmap for what's coming. Charts, as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.